Joining us with more is Jim Rogers, Beeland Interest Chairman in Singapore. Jim, very good day. What do you think of the People's Bank of China's comments there, though? They're not saying they like the dollar, but they're going to hold on to it.
Well, I think they're making a mistake. I'm glad they are holding on to it because they're holding the price of the dollar up so I can get out of the dollar. I want to get all of my assets out of U.S. dollars, so let them hold it up as long as they can. I think they're making a terrible mistake. They should be getting... Oh, it takes a few more weeks, few more months to get all of my assets out of the U.S. dollar, but I hope by the summer I don't have any more U.S. dollar assets.
And what are you buying?
Well, if I were buying various things, commodities, the Japanese yen, the Swiss franc, the renminbi. If I were buying currencies today, I would buy the renminbi, the Japanese yen, and the Swiss franc. They're very, and agricultural commodities is a way out of the U.S. dollar. There are various things that I own, but those are what I would be buying today.
Yeah, I mean, this may be a personal question, but what kind of sums of money are we talking about here? How many dollars are you going to be getting rid of?
Paul, I know you have to ask that, but I grew up in a family where we were taught never to speak about how much money we have, how much things cost, how much money we made. I know there are a lot of people on Wall Street these days who would love to tell you how much money they have, how much their car costs, how much their house costs. My family doesn't talk that way.
Fair enough. What kind of split in your holdings will you have between, particularly on the currency side, let's focus on that, between, say, yuan, yen, and Swiss franc? I mean, where's the majority of your holding going to be?
Well, Swiss francs and yen are much easier to buy. It's not that easy to buy the renminbi, for me anyway, so obviously I have much more in things like euros, Swiss francs, yen, Singapore dollars, Canadian dollars. Those are the sound currencies and the places to have money.
Would you buy any Hong Kong dollars on betting on the peg breaking and the Hong Kong dollar skyrocketing?
I own some Hong Kong dollars. I don't expect the Hong Kong dollar to be around in 5 or 10 years. I don't know why there is a Hong Kong dollar, Paul. I mean, it's a historical anomaly. I suspect it's going to disappear. It's not good for Hong Kong to have the Hong Kong dollar. But who knows what rate it will be converted. If you know, you should tell us all so we can speculate ourselves. But I own some, not because of that.
Right, the Hong Kong Monetary Authority says it's not going to get rid of the peg, and it says it would be unrealistic to do so because the yuan is not convertible and most international trade is in dollars. Now, what that means in the meantime is,
well, that's
got, as you said, undervalued currency. So would you buy Hong Kong dollar assets?
Well, I own shares in Hong Kong, and I own the Hong Kong dollar itself. And it's a very good point they made. The Hong Kong dollar must stay around as long as the renminbi is not convertible. No. I don't expect the Hong Kong dollar to disappear until the renminbi becomes completely convertible. There's no chance that Hong Kong would do away with it before that. And they shouldn't.
Okay, now, this is all prompted, of course, by the U.S. currency, and the guardian of the U.S. currency is the Federal Reserve. Now, on October 21st, you called Ben Bernanke, the Fed chairman, a madman, and it's not the first time you've done that. Do you really believe that, or do you think that perhaps he's got no choice because he has to avoid financial panic, which we almost saw in the UK with the run on Northern Rock?
Well, Paul, listen, the man doesn't understand the situation of the markets. He doesn't understand the currency markets. He doesn't understand the economy as far as I can see. All he has done in his whole life is study the printing of money. Now America has given him the printing presses, and he's running them. Did you see him before Congress last week? He said, and I could not believe it, I was terrified. Another reason to get out of the dollar, he said, Americans who buy only American goods are not affected if the value of the U.S. dollar goes down. I couldn't believe it. Everybody in Economics 101 knows that. Not every citizen in the world, but anybody knows that. The idea that if you only buy American products, look, if you only buy American products and the dollar goes down, the price of oil goes up, copper goes up, wheat goes up, that affects you. Let's say you only buy American tires. Fine, the price of rubber goes up, so the price of your tires goes up. And if you only buy American tires and the price of foreign tires go up, then you can't buy foreign tires anyway because they're too expensive, so the price of American tires go up. This man said that before Congress, under oath, like he knew what he was talking about. So he is a total fool or charlatan, or he's a complete liar, one of the two. Now, you're making the point that he has to be a liar. He has to say things like this, but he was not. Somebody just asked him a question. Ron Paul asked him a question, and that was his answer. I was terrified. If you've got any U.S. dollars, I urge you to get out of them on this next rally. There's probably a rally coming in the dollar. Boy, with a man like that running the central bank, that's not a currency to own.
are you going further than getting out, i.e. shorting US dollar financial assets? You did that in 1987, sorry, just before the crash. Are you doing it again?
Well, I'm short investment banks in America, but I own American stocks as well. I'm reducing my holdings of American stocks, and I am increasing my shorts of investment banks in America. Who knows? You ask me in a few weeks or a few months. At the moment, I am not optimistic about the American stock market, but I am still net long. I think that my shorts are going to protect me much more than my longs might get hurt, but I am increasing my shorts.
Okay, just about 30 seconds left. You've got a book coming out, Bull in China. That's coming out December the 4th. It's about investing in China. Give me your top message about investing in China. What do you have to do?
You need to learn about investing in China. It's going to be the greatest country in the world, the most important stock market in the world in the next 30 or 40 years. You need to learn about it. This is not a book of hot tips. It's a book about learning about investing in China and what's going on there. Everybody should know about China, just like everybody should have known about America 100 years ago.
Okay, Jim, thank you very much for that. Jim Rogers, Beeland Interests Chairman, once again joined.